Hi guys, welcome back to another video. I'm actually in Bangkok right now. This is a very makeshift setup. I'll actually be traveling around the next couple of months because I've decided to just be a digital nomad and live life a little bit. Okay, anyway, this video is going to come into a few parts. The first part is a little bit about me. Why do I choose to travel around, like be a digital nomad? Why do I choose to rent and not buy at this current moment? Just like general adulting stuff. If you're not interested in that, skip to the end of the video where I talk about the thoughts on the market, and where I see it going in the next couple of weeks. Of course, you have to be more reactive than predictive in nature because, as always, we have to rely on Federal Reserve, Jerome Powell. So yeah, we'll see what happens. Okay, so first and foremost, why do I choose to rent and not buy now? It's a very simple matter of quality of life and cost of living. Where I'm from, like even if you're in Singapore or Hong Kong, housing prices are expensive, and above that we have high interest rates right now. So actually, I think, to be honest, this is a very, very bad time to buy a house because we're like just at the cusp or the tipping point before asset prices drop. We can see that happening in places like the US right now, where you can see that the asset prices have already been dropping. And if you want to look into history to give us an example of what happens when we go from a period of QE to QT, you can just look in Japan, for example, where so many people are now getting super cheap houses. But of course, you don't want to stay there because they're not earthquake proof. But in the sense of whether Singapore or Hong Kong housing prices will drop, I really don't think so because the demand is still a lot higher than supply, right? But for other countries like the US, where they have abundance of land, right, you can see that even the realtors, there's an ebbs and flow in terms of people who want to sign up to be real estate agents because they see it as a very lucrative career. I think that this depends on the liquidity of the market and how fluid it is. In Singapore, I still think it's good. If you live somewhere in Thailand or KL, subjective because you're still very dependent on whether the government builds sufficient infrastructure around your area to see if your asset prices go up. Of course, I am not a real estate expert. It's just something I've been researching into because I'm trying to make my own personal decisions whether it's wise to buy a place. If you're trying to buy a place in somewhere like Singapore, if you are from there, it's actually pretty good because over time, I still think that property prices will appreciate over time. But if you want a more risk-free way of making money, honestly, right now, bonds are a good deal. So basically, I talked about it in my Telegram channel previously that I've been buying bonds. Why do I want to buy bonds? Because right now, bond prices are low. We're not buying it because we want that 4% interest rate or 5% interest rate, depending on the Fed funds rate, right? We're buying it because when the yields increase and the interest rate increases, the bond value drops, right? And you're trying to get that face value increase. And over time, even if that face value doesn't increase, the amount that they pay you through the yields and the coupon payments will cover any drop in the bond prices anyway. So do I think that bond prices will continue dropping? I don't really think so. I think we're reaching a pausing stage in terms of the interest rate hikes, right? The Feds are right now very data driven and they are reactive, so they can't really afford to say, hey, let's go and cut interest rates right now. I think they'll get like a whole backlash about that. So right now they are just trying to be a bit more safe. We'll probably have 1 or 2 more rate hikes, but even then I rather still choose to be reactive. The bond market right now is already pricing in a rate hike in the next FOMC meeting, I think in June 13 and 14. So we'll go into that later. But back to why I choose to live freely, and because I think that like the quality of life in Bangkok, KL, or Bali, where I'm gonna be traveling in the next couple of months, is a lot better. My purchasing power is a lot stronger due to the stronger currency. So as a single dude, I think that it's a very smart choice to enjoy my life. I don't know, but obviously I still see credence and value in going to the corporate sector, which I tried for a while. I worked in oil, and as an oil analyst, I also did previously I did risk analyst in another firm. So that also expanded my knowledge in terms of looking into different kinds of asset classes and understanding currency and interest rate changes more. Previously, I was just a crypto trader, if you knew, 3-4 years ago. Like I've been posting for so long, but it's okay. Anyway, if you want to see more of my track record, my history of my trades, it's on the Telegram channel below, right? So basically for me, I'm probably going to choose to rent for a bit longer until the interest rate drops. I will definitely take a loan. I still think it's for most people, if you take a loan right now, you don't really know where the market conditions are going. But since I read and I'm updated about it every single day, If you see how much I post on the Telegram channel, you know I'm like reading news every single second of the day. And based on that, I think I have an understanding of like when is the right time to take a loan and buy a house. Because I think that if you know how to use leverage in an easing environment, right, when we get into a QE environment, that's how you make money. You just need to know the ebbs and flows of the market cycle, right? In a QE environment, you should be a borrower because borrowing is cheap. The cost of capital, the cost of credit is cheap. But when it's in a tightening environment, it's when you should also tighten your own expenses. And that's also what happens with the correlation between fertility rate and why, like, even like look at Japan, right? I keep using a Japan example, but like culturally they're different. But in the same sense, when you tighten people's spending, they want to procreate less, they have less coitus. And at the end of the day, that's how fertility drops, right? Yeah, so for me, I'm probably going to travel a little bit more, trying to like expand my cultural understanding. At the same time, I have a lot of autonomy to keep reading the markets every day and keep you posted on this kind of stuff. So like we're going to the markets right now. If you can see my Telegram channel, I actually posted my updates the last couple of days. I've been trading pretty good actually. So I took a SPY short at 420, yeah. I argued with a lot of people on Twitter about that, like why did I choose to take that position there. It's just a simple trade. I just thought that it was a decent trade at 420 levels. Like so at 420 I took a short and I'm expecting about 416. Yesterday I also posted that my TP is about 412 to 414, but I'm probably gonna leave a small runner because I think if the debt ceiling situations gets delayed, of course the debt ceiling is gonna pass. Of course they're gonna print more money. That's no doubt, right? They can't just let the government fail. But the longer they delay it, and if there's a whiff of like default going on, of the credit ratings have a chance of dropping, you can see the markets tank all the way to 412 quite easily. I don't see that being an issue, right? But it's just simple RR, right? It's just a risk to reward ratio. I have my 1:2 there. It's actually more than 1:2 because my SL is 422, right, for SPY, and I am looking towards 412. Okay, a lot of people ask me why am I not shorting the video, why am I not shorting QQQ, why do I not play other counters? Because it's just so much simpler to trade the equity markets on a broad sense like the S&P. If I do QQQ, I'm actually like putting myself more at risk to like a bigger market changes and stuff I can't control. Because as we all know, the S&P 500 is like a broad-based 500 companies, right? But right now it was carried up by a few. The breadth was very small. So I was talking about this in the Telegram channel. The breadth was very small in the sense that it was carried up by a few big names, Nvidia, your Googles, your Apples, and whatnot, right? And Nvidia went on this whole like press conference thing for a whole week, trying to shield their not shield, but I mean, I believe AI is a disruptor, but I still think that it is overvalued now. Will I be shorting it? Heck no, right? But I don't want to be in QQQ. I would rather short SPY because I just feel like technically it's more sound. And my objective is to make money, not to make humongous amounts of money, right? I just want to make some money, right? Right now I'm just trying to like optimize my strategy. And of course, I always mention in my Telegram, I have many different trading accounts. My largest one will probably be my options portfolio, but I have a CFD account and I have a futures account. You want to use my referral links, it's in the link in bio below. I'm going to share more about that, but generally, that's my SPY trade. I'm shorting it right now, and I'm targeting 416, 414, where your Fibonacci golden ratios are. But can it go lower? Yes, depending on the debt ceiling deal. And so now it's just a trade to me. How am I managing it? I'm constantly selling puts every day to collect decay and credit, right? And how am I doing that is that yesterday I sold at 418. It didn't assign. So because of that, I got like about another $30 and it gave me like 30 cents more in. So basically every time I keep doing this, it raises my average price from 420. Now it's $420.30. Tomorrow I do it. I'm already currently in one right now. If you can look at my Telegram channel, I post my daily updates there. Basically, I sold one at 4:15 for May 31st, which is today. I'm filming this at 7 p.m. Bangkok time, I have no idea. And then I have another one at June 2nd. I'll keep rolling it, but I'm trying to perfectly time it. It's not like the market opens 9 p.m. Okay, I open up a cash covered put to close my shorts every day at any price. No, I don't. I calculate the delta and I make sure that, let's say, okay, yesterday I predicted the low will be about 419, right? So I went to go and calculate the delta change with the option price, and then I tried to put a limit order there. But obviously, throughout that 6-7 hour session, the option price will change because it will slowly get decayed. You'll get less premium. So I'm trying to do all these calculations, but it's pretty chill. I'm just trying to like cost average my short. Okay, if this is tough for you to understand, I will do another video on that. But basically every day I'm selling cash cover puts, and then eventually when it hits my target, I will close it. I'm trying not to get assigned on every day these positions, and I have limit orders for every single day. So that's basically every day I'm collecting like $30, but it's pretty small size compared to my portfolio. I'm just trying to practice a strategy, right? And there's stuff I'm learning about using debit spreads versus credit spreads, when it makes sense to long Vega in accordance to implied volatility. I've also shared about using a back call ratio spread on VIX when it was low, above. Okay, if all this is hard for you to understand, it's fine. You can just do the simple technical stuff, which I do on my CFD account. So today I took some trades on gold, right? I'll share it with you guys here. Give me a sec. So I took some trades on gold. If you can see in the Telegram channel, I have been longing it from 1935. I've been longing it because I thought it was very oversold, right? And basically, I said that I think it'll go to 1935 to 1942. It went to 1932 at the lows, but I held, right? And I sold some off yesterday, and I mentioned I sold more off today. But for gold, I have both a CFD account and an options account, right? So basically, if I'm doing CFDs, I can trade the whole day. So I'm more aware of the London session, the Asian session, and the New York session, and the session kill zones in between. Of course, this is very advanced for people who are beginner traders, but the idea is that you can just follow along and slowly learn with a smaller portfolio. I'm not saying I'm an expert, but I've been doing this for quite a while, and like I try my best to keep studying every day. I'm trying to get better every day. So here I bought at 1935 to 1943, and today I sold at 1965. And I gave you the exact timing I sold, right about here. So when I said go pushing to 965, it was 964. I sold off at, I'll say I lay off some now. You can see it's not edited, so I don't like delete anything. You can just check, I never delete anything, right? And basically, it's back down now. I took a short there and probably going to close it a little bit earlier. I expect it to be a bit more rangy. I think gold will be rangy. So to close off, I'm going to give off like my assessment on the more midterm time frames on all the counters. But yeah, that's my perspective on gold now. I took a long up and I took a short down. No, I took a long up, I took a short down, yeah. And I closed the short. I haven't closed the short yet. But I think that gold in the macro long-term time frame, it's wickish right now. It's still trying to find a stable price point. And even if there's downside, I don't think there's a lot more downside because, to be fair, central banks are accumulating gold. And I think the reason you need to accumulate gold is because we're still in an inflationary environment after all. And you might think that gold is at all times high, right? But in accordance to the dollar has devalued like 27 or 35 times since like 1920 or some shit, right? Gold actually has been at this range for the whole time. So in terms of if you put it according to the dollar, gold has not actually been at all time high. The dollar has been dropping the last couple of years. So you're gonna put things in relation to the dollar. Gold, in the same sense, it is not a way to buy whole and then you're gonna get rich in like 10 years. It's not that. It's just more of a way to preserve wealth. It's still a safe haven asset. And I think Bitcoin doesn't have that authority right now. I can go on a whole long ass video about Bitcoin versus gold and my thesis on them, but I think that if I want to, there are a lot of boomers around still and they still control the monetary system. So at the end of the day, I will side with them and say that I would rather hold gold right now. Of course, I'm not saying Bitcoin can't go up, but I'm trading Bitcoin. I'm not a hodler of Bitcoin. I hold a small portion, and that's like less than 10% of my portfolio. There's a core and a satellite portfolio. It's all about, at the end of the day, right, every day, you keep thinking, I don't want to lose money, but every day, right, whatever currency you hold loses value over time. So if you keep protecting your wealth, you're not going to make any wealth. The idea is just to manage it over time and try to grow wealth over time. So don't think things in such a short-term time frame. I'm talking to myself as well. Okay, so that's just the psychology of it. I'm going to interview some traders and develop my psychology over time. Okay, so when we talk about Bitcoin, Bitcoin I took a short after that big rejection. So I took a short yesterday because I saw SPY and Bitcoin dropping at the same time. This thing is a bit subjective, whether Bitcoin and SPY drop at the same time. I mentioned on my Telegram channel, it depends whether you see it as a risk on and risk off asset. But there comes a time where I think Bitcoin will stray away from the risk on narrative. People still see it as a risk asset right now. That's why it's still very highly correlated to SPY. When I accessed the Bloomberg terminal, when I was working in the past, Bloomberg terminal is like this like 20K per year system where you can check like a lot of technicals, right? When basically Bitcoin and SPY are very correlated when you're looking at a risk on and risk off perspective. But when it's not in that situation is when I think when we look at central banks failing or people really fearing for the dollar, like when we look at the dollar milkshake theory or when people are like weaponizing the dollar, this kind of situations, right? I think that's when Bitcoin actually strays away from that narrative and it becomes more like a disruptive innovation thing right now. People are still scared of it right now, you know? So I don't think it's still like a safe haven asset where people try to protect. It's still too volatile. It's not even a medium of exchange. It is not a... It's so many things, right? But at different times, it's different things, right? People say Bitcoin is a medium of exchange. People say it's a mode of transaction. There's so many terminologies with it, right? But at the end of the day, if I'm trading technicals right now, I still think there's upside on this. This move has not been fully established yet. I won't rule out a possibility of a 34, 35K, but it's going to take a while. It's probably going to range here as well. So, like I said, I took a short from around 28. I'm closing at about 26.7 here. Basically, is your point of control here, your high volume node, pretty strong around here. It's probably going to wick down below 27, and I shared about this in my Telegram. It is very difficult for me to update constantly on Telegram. I think I'm updating quite a lot already, right? So here I want to take a shot, and then, yep, it went down today as well of the equities. I'm going to try and do it on Discord with different like time frame groups because I know not everybody wants to be so speculative and trade every single day. And if you trade the same size for every style of account here like that, you're going to blow your account because I trade differently for different ones. My CFD account is very degenerate. My futures crypto account is very degenerate. My options account is actually quite stable. I'm mostly collecting credit spreads, right? So I'm going to close things off with an overview on the markets right now. Right, the reason I'm not doing Tesla on the video right now is because earnings is just over. The volatility is very high right now. I would rather take a surefire way of making money. Okay, so my thesis on SPY. I think that no doubt after debt ceiling deal, we are back into an easing condition. We are slowly getting to an easing condition already. So I'm more of a buyer than a seller in the long term. If I'm not sure what to do right now, I will just sell cash covered puts because even if they go up, I will make money through premium. But if I get a sign, I don't mind holding because I still think we're in a easing macro environment. So yes, SPY I'll buy. Gold ranging right now, Bitcoin ranging right now. Gold range but probably goes down. Bitcoin range but probably goes up. This is for now what I think is going to happen, right? But of course this will change with FOMC hearing and everything, right? So we will see what happens in the next few videos. But as of now, my trades are basically playing the triangle and the wedge on Bitcoin and gold, and for SPY I'm just going to sell cash cover puts. So that comes to the end of this video. Do remember like, share and subscribe. I'm not charging for anything, right? And just like leave a like if you think this is helpful. On a parting note, I used to like overthink content a lot. Like I was like, what if I give wrong ideas? But at the end of the day, right, I'm giving this out for free. It's up to you. If you lose money, you lose money. It's still risk management at the end of the day. I generally think I've been pretty spot on. If you ask the other people in the Telegram channel, or if you've been there, or you just scroll up, you can see that I've not really missed many beats. And I guess the reason I'm still surviving is because I'm not the worst trader in the world. I don't know if I'm the best, probably not, definitely not. But I'm not the worst. And this is just a learning journey experience for me and yourself. And the rest of the videos will probably just be me traveling and derping around. I'll still do some fitness stuff if you're interested in that, but yeah, mix and match. Okay, see you guys. Bye.